What's going on, guys? 8th of November. We're settling into this whole situation of the, new regime that's going to come. And it's going to take a little bit. There's going to be a lot to do. But we're looking at how the market has reacted. It has actually reacted very positively yesterday. And today it's trying to go positive. But, let's take a look. First off, we got the Dow is up significant. We're knocking on 44,000. Like we were saying, when the last time Trump was elected, the stock market just went nuts and it has stayed up there. And now we got the S&P, NASDAQ, everything's cranking. And oil's going down. That's also interesting because they know there's going to be drilling, there's going to be pipelines, all that kind of stuff. So that's going down. That's going to help our economy a bit. Interesting information we have. Old data coming in, right? We're looking at old readings for the jobless claims. This is all going back for last month. So looking at those readings, they anticipated to show 224,000 initial claims is actually 221,000, which is dropped from what they anticipated, but it's up from the prior reading. So the prior is 218,000. It's still up to 221,000. Still jobs, in jeopardy. They expected them to be more losses, but it wasn't as high as there was anticipation. So that's a little bit of a help. Continuing claims went up from 1.853 to 1.892. So we had a significant jump there. Labor costs up significantly. Expected 0.5%. It was 1.9%, nearly 2%. It's nearly 4 times higher than what they anticipated as far as that percentage is concerned. Then, of course, we had the Fed rate decision, brought it in a quarter, that little bit of a drop that helps us with our credit cards and those other things, good stuff. But that's also anticipated. We didn't see a monster move in the market as a result. It's still good. We still saw some positive reaction, but that positive reaction just was where it was before that was released, and it stayed there. But we had some positive information this morning. So let's show you what that looks like, or see some positive response in the market this morning. Now, it's small, but it's still a response that's beneficial to us over here in the mortgage-backed securities. So take a look here. There we go. So look at this. So it sat right in this range all day yesterday, right above the 200-day moving average. When you had waiting for Powell to come out. Now, so we did have some positive response, and this morning some positive new response to it. So it's not going to be monster, right? We're not going to see a 0.25% drop in the interest rate. I'm surprised we're having this much positive, but I think that they are anticipating the 0.25%. They got the 0.25%. People are feeling confident and comfortable with what's going on in the economy. Money is flowing into stocks, flowing into bonds at the same time. Now, not significant movement into bonds, very slight move. We're talking about 18 ticks here, but it's still better than no positive movement at all. That in itself would translate to about, let's just say, 1/8 of a percent in cost. So if you got a quote on a rate and it cost you a certain amount, well, that would be, say, on a $100,000 loan, $100 cheaper now with this positive movement. Now, does it translate immediately? No, it probably translates over a 24-hour, 48-hour period, because we have to see if it settles in, because it could move negative quickly. And, they don't want to price themselves in a position to have to reprice it in the middle of the day. It just never works out that awesome. So that's where we sit right now. Positive stuff in the bonds, not crazy, but at least we're not losing ground, and we're out of the channel, going up to the to those ceilings. So again, out of the channel. I'll wait for this to get okay. We're going out of the channel. We're bumping up against moving averages. We're going to head to that ceiling. We could bounce off of that one. We could be trading kind of like we did here, trading in this particular range. If that's the case, you get up in here. That I don't. How hard it is to break past that. We have to have something significant. This was the last time we broke through. It was because we had a 1,000-point loss in the stocks. So then it kind of opened that door up for it to go to this point, and then it completely took that massive slide. So we'll talk to you guys on Tuesday. Hope you have a really, really, really good weekend.